Hi, welcome to our new episode of Absolutely, Business Entrepreneur Stories. Third part. The History of LVMH. In this episode we will see the history of LVMH, one of the world's leading luxury goods conglomerates. LVMH, which stands for Louis Vuitton Moet Hennessy, was founded in 1987 through the merger of two French companies, Louis Vuitton, a luxury fashion house, and Moet Hennessy, a producer of fine wines and spirits. The merger was orchestrated by businessman Bernard Arnault, who had taken control of the struggling textile and construction company Boussac in 1984, which owned Louis Vuitton at the time. The 1987 merger. In June 1987, a $4 billion merger was effected between Louis Vuitton with Moet Hennessy, which allowed Louis Vuitton to expand its investments in the luxury business, while saving Moet Hennessy from the threat of takeover. Moreover, the merger respected the autonomy of each company over its own management and subsidiaries. As Moet Hennessy was 3 times the size of Louis Vuitton, its president, Alain Chevalier, was named chairperson of the new holding company, Moet Hennessy Louis Vuitton, LVMH, and Rackmeyer became executive vice president. Massive disagreements and feuding followed, however, as management at Louis Vuitton believed that Moet Hennessy was trying to absorb its operations. The 60% ownership that Rackmeyer and the Vuitton family had held in Louis Vuitton became a mere 17% share of LVMH. After several disputes and legal battles between Rackmeyer and Chevalier over the running of the conglomerate, Rackmeyer invited the young property developer and financial engineer Bernard Arnault to acquire stock in the company. Hoping to consolidate his position within LVMH with the help of Arnault, Rackmeyer soon saw, however, that Arnault had ambitions of his own. With the help of the French investment bank Lazard Frères and the British liquor giant Guinness plc, Arnault secured a 45% controlling interest of LVMH stock for himself. An 18-month legal battle ensued between Rackmeyer and Arnault, after Chevalier had stepped down. Despite Louis Vuitton's strong performance, accounting for 32% of LVMH sales, Rackmeyer could not hold on to his stake in LVMH against Arnault, who had the support of the Moet and Hennessy families. The courts eventually favored Arnault, and Rackmeyer stepped down to create another luxury goods conglomerate, Orchify, with the backing of such French investors as Paribas and L'Oréal. Arnault weeded out Vuitton's top executives and began to bring together his fragmented luxury empire. Guinness plc had originally been brought into LVMH by Alain Chevalier, who had hoped to find an ally in his feuding with Rackmeyer, in a deal to exchange 1/5 of the two companies' equity capital. Guinness then united with Arnault to control LVMH. In 1990, when Rackmeyer left, Arnault increased his interest in Guinness from 12% to 24%, fueling rumors that Guinness would be his next target. Takeover speculation was also encouraged by the fact that Guinness directors had little power in LVMH, while Arnault had by far the largest shareholder vote in Guinness. However, Arnault's percentage in Guinness was proportionately equal to the 24% Guinness controlled of LVMH. In the early 1990s, Arnault controlled the world's largest luxury empire, with about $5 billion in worldwide sales. His holdings were structured as a pyramid of interconnected companies with control of LVMH central to his power, as it had a market capitalization of $10 billion in 1990. The ubiquity of the Louis Vuitton monogram in the mid-1980s had damaged its reputation as a status symbol, and both profits and sales declined in the early 1990s. However, demand for luxury goods was expected to rise again, especially in Japan, Korea, and China, where buying power was growing rapidly. Still, the American market, which accounted for 17% of LVMH sales, was not expected to remain strong as an upheaval in upscale retail outlets was hurting sales. Arnault planned to create data processing and advertising sharing among his luxury retailers, including Louis Vuitton, Dior, Givenchy, Lacroix, and Loewe. Also in the early 1990s, Yves Carcel, a former textile executive, became president of Louis Vuitton and broadened the range of products distributed to the company's 150 stores in an attempt to increase sales. Rampant counterfeiting, a difficult world economy, and its own flagging image were Louis Vuitton's nemesis in the early 1990s. Ups and downs in the late 1990s. LVMH focused on growth and expansion in the mid-1990s and spent more than $3 billion during 1996 and 1997 on acquisitions. In 1996, Arnault invested $2.6 billion for a 61% interest in DFS Group Limited, a specialty retailer that catered to international travelers. The purchase included 180 boutiques in Asia, DFS's largest market. LVMH also invested in winery Chateau d'Yquem and purchased the fashion companies Celine and Loewe. The following year, LVMH acquired Sephora, the French retailer of perfumes and beauty products, for $267 million, and invested in Douglas International, a German retailer of cosmetics and beauty goods. Though LVMH diversified and grew its operations, many challenges arose in 1997 and 1998, and the company suffered from sagging sales. LVMH was hit hard by the economic crisis in Asia, a market that accounted for about half of LVMH's total sales. The company's investment in DFS was initially a disappointment. During the first half of 1997, DFS profits declined 50%, and during the first 9 months of 1998, group sales for the retailing division that included DFS and Sephora declined 22%. In addition, several markets in which LVMH operated experienced difficulties. Increased competition and shrinking margins in the perfume industry, for example, posed a threat to LVMH's perfume operations. In 1998, sales of LVMH's fragrance and cosmetics division declined 3%. The wine and spirit segment was a slow-growing business, and LVMH sales of cognac had the most trouble, primarily due to a poor market in Japan, which accounted for about 20% of cognac sales. Cognac shipments to Japan fell from 6.2 million bottles in 1996 to 5.0 million in 1997. In 1998, shipments fell even further, to 4.3 million bottles, and total LVMH cognac sales fell 13%. LVMH also spent much time and money attempting to thwart the merger of drink rivals Guinness plc and Grand Metropolitan plc, and this, coupled with the financial situation in Asia, led to a 38% drop in LVMH's share price between July and November. For the year ended December 31, 1998, LVMH reported total net income of FFR 3.45 billion, down from FFR 4.87 billion in 1997. Despite LVMH's struggles in the late 1990s, the company remained confident that what was being experienced was only a temporary slump. In LVMH's 1998 annual report, in fact, Arnault stated that 1998 was a year of consolidation and restructuring, aimed at laying strong foundations for resumed growth in 1999. Many industry analysts appeared to agree. Merrill Lynch global securities analyst Edouard de Boiscalin predicted in Business Week in late 1997, Asia will come back. It will be a phenomenal source of growth for years to come. To prepare for the renewal and growth, LVMH continued to seek acquisitions. In 1998, the company purchased Le Bon Marché, an exclusive specialty retailer in Paris. LVMH also bought Marie-Jeanne Goddard, a leading distributor of fragrances and cosmetics in France. Marie-Jeanne Goddard offered 77 shops in mostly medium-sized cities in France, and 6 stores in other European nations. LVMH felt the Marie-Jeanne Goddard acquisition was a perfect supplement to its Sephora stores, and during 1998 LVMH managed to convert 18 Marie-Jeanne Goddard stores to the Sephora format. LVMH added to its champagne division in 1998 by acquiring the premium champagne brand Krug from Rémy Cointreau. The firm also upped its interest in Gucci, from 4.8% to 34.4% in early 1999, with the hopes of acquiring the company. French retailer Pinault Printemps Redoute SA beat out LVMH in mid-1999, however, by gaining a majority stake in Gucci. A return to success came quickly, and 1999 was a strong year for LVMH. Asian economies were on the mend, helping to boost LVMH's sales activity. Between January and August, the company's share price rose 77%. For the first half of 1999, LVMH reported sales of €3.59 billion, a 16% increase over the first half of 1998. Though DFS continued to rack up losses, the amounts were shrinking, and the company felt strongly that DFS had hit a turning point. Though cognac and spirits also continued to struggle, other divisions made up for the loss. Operating profits in champagnes and wines rose 39%, perfumes and cosmetics increased 45%, and fashion and leather goods climbed 15%. As sales increased, so did LVMH's acquisitions. The year 1999, in fact, marked the company's busiest year in terms of acquisitions. To expand its fragrance and cosmetics holdings, particularly in the United States, the company invested in 4 American beauty products companies: Hard Candy, which targeted female youths, Bliss Spa, Benefit Cosmetics, and Makeup Forever. LVMH also established a new watch and jewelry division, which included Tag Heuer AG, a Swiss watchmaker in which LVMH gained a majority interest in September 1999. LVMH also acquired luxury watch makers Zenith, Ebel, and Moet. LVMH also entered into some strategic partnerships to remain competitive in the marketplace. In October, LVMH partnered with Italian fashion company Prada, usually a competitor, to acquire a majority stake in fashion design house Fendi, an Italian company operated by 5 sisters. Among LVMH's other 1999 acquisitions were a majority interest in Thomas Pink, a British shirt maker, and the purchase of Philips Auctioneers. The company also increased its stake in Interparfums Incorporated, a perfume manufacturer, from 6.3% to 20%. LVMH sales in 1999 reached a record FFR $56 billion, up 23% over the previous year. The company appeared to have recovered indisputably and solidified its position as the leader of the luxury goods market. Champagne sales rose by more than 21%, and cognac sales fared better for the full year, with sales up by 7%. By the end of 1999, the fashion and leather goods division consisted of 261 boutiques and 15 global stores. Louis Vuitton sales, which had suffered during 1998, did much better in 1999, particularly in the fourth quarter, during which sales increased 45%. Fragrance and cosmetics sales rose 24%, and sales in the selective retailing division increased 21%, indicating a more positive situation with DFS. Sephora stores expanded aggressively during 1999, and 127 new stores were opened that year. By year's end, there were 253 Sephora stores in Europe and 50 in the United States. Sephora enjoyed its first store opening in Tokyo and began selling products via its website as well. LVMH opened its U.S. headquarters in New York City in December 1999 and seemed poised to enter the 21st century full steam ahead. In recent years, LVMH has continued to innovate and adapt to changing consumer preferences. The company has invested heavily in digital technologies and e-commerce, and has also focused on sustainability and social responsibility, launching initiatives like the LVMH Prize for Young Fashion Designers and the LVMH Institut de Métiers d'Excellence to support the next generation of talent in the luxury industry. Today, LVMH is a global leader in luxury goods, with over 75 brands and annual revenues of over $79 billion in 2022. Bernard Arnault is officially the richest person on Earth. Arnault's wealth now tops the wealth of Tesla, Twitter and SpaceX CEO Elon Musk, who lost his title as the world's richest person in December 2022. But with his 5 children primed to take over the throne of his luxury empire, was appointing his daughter Delphine Arnault, who became the CEO of Dior in July 2023, and Pietro Beccari as the chairman and CEO of Louis Vuitton. Thanks for watching this story, and I hope you enjoyed the history of LVMH and its success attributed to the focus on quality, innovation, and craftsmanship, as well as its ability to adapt to changing consumer trends and market conditions. If you liked the video, don't forget to give it a like and subscribe to help this channel grow. Absolutely, inspiring business and entrepreneur stories. So, what's your story?